Okay. Technical issues solved. There we go. Now we're live. Okay. So what happened here is I was talking to myself like a bloody idiot, and actually on YouTube you have to click go live even when you start streaming. So and that's the only thing I didn't do. But here we are, we're live. Bam, right there, all set. So as I was saying, I really do enjoy doing these live streams. It's been quite a while, and probably my favorite thing about these live streams is, you know, we tend to go on for quite a long time. So, for example, an hour is normal on this channel for a live stream, and that means I can really answer your questions and give you guys the insights you want. And actually, on that note, as we go along, if you have questions, if you want me to analyze a specific chart, if there's a trading question or analysis question, you can shoot it over in the comment section. VIP members, you can DM me on Telegram, and I'll do my best to answer you there as well. And if you end up wanting to join VIP while we're streaming, then my assistant is also here, so he can get you enrolled relatively quickly. So let's get started. A lot has happened in the market today. Bitcoin has seen a little bit of a dump. Gold is rising nicely. It's actually starting to approach that resistance level at 1910. So I am excited by that. We've seen a small drop across indices, which I will talk about a little bit later, and altcoins are doing more of the same. Bcash is sideways over the past 24 hours, although it is on a slight rip. What is this? What is this gain? Bcash is up by 10% over just a couple of days, so that's pretty cool. But the rest of these altcoins are not doing too well. Cardano is seeing a bit of a drop into support, which is another thing that I want to talk about. So, wow, the latency isn't bad. I think the stream is only delayed by like 30 seconds, so that's pretty cool. So yeah. Let's get straight into it. I need to pull up my notes again because I had to hide everything to fix those technical issues. And a real quick note, by the way, a lot of these videos, all of these videos are freestyled. So I do have notes, but I don't have a script or anything like that. So it really is an art for me. I really do enjoy it. What have we seen? Right. So I've now drawn for you a symmetrical triangle over here, and let me simplify this. Let's go on to another chart where I haven't really drawn anything, and draw this very same symmetrical triangle for you. It looks something a little bit like this, and really the crux of it, for lack of a better word, is we are starting to kind of how do I say, narrow down and compress with our price action, and that could be a problem if we truly are in a bearish trend, because if we're starting to have some price compression here, usually what that's a sign of is the market is getting ready to drop, and it's basically the less people are interested in it, more people are kind of waiting on the side, ready to do something a little bit interesting with the market, and that in a bearish trend is not a good sign. So we've seen some developments in line with that bearish side. We ended up topping out at 11.1, 11.2 a little bit earlier, and this was what, like 10 days ago, and now we've ended up topping out a little bit lower at 10.9. So our new high is $200 lower, and we do, we're not really showing that momentum that we initially had over here. We're not seeing that continue forward. What I don't want to see in a bearish trend, right? And this is a bearish trend in the short term, at least, because we're coming down from 12.5. What I don't want to see in a bearish trend is that we keep setting lower highs. And, well, here we are. We are setting lower highs. And that's never a good sign. Basically, what this is doing for me is it's giving me more signs of confirmation that this trend is bearish. It doesn't necessarily mean that it's bearish, but more accurately, it's giving me signs that we are bearish. And I think that's a really big problem, because if Bitcoin does want to break higher, if it does want to carry some momentum higher, I think it's going to have a really tough time doing that if we're already setting lower highs. The good news is that we're not setting lower lows, so the market isn't terribly bearish. In fact, from the support standpoint, we're doing pretty well. But I mean, how long is this support going to hold? I think this support maybe has one more test left in it. But to be honest, considering we already plunged below it, I'm talking about this green box here. So this green box is support. It lines up with our diagonal line over here. So this green box is very, very important. We plunged through it on our first attempt, and then we recovered above it, and then we plunged through it again, and it wasn't a dependable area of support. The next time around, we did respect the support a little bit more. We did treat the support with more respect, and the price did bounce off very nicely around this level. But given that it's already been weak, and I mean, you know, we're starting to set lower highs, and that bearish sentiment is already stepping back in, which shows you how fragile the market is. I don't know if this support level is going to hold again. I think there's a decent chance that it won't hold, and if it does hold, for example, it could actually look something a bit like this. We end up falling into the support level, coming back up to resistance, and then we break below it on the second attempt. I think that's very likely, considering what we're seeing in the market at the moment. And that is, you know, kind of partly due to the fact that we did get these rejections at, you know, 10.9. We couldn't even break the high at 11.2. We couldn't even get there. So if we want to see a bearish, if we want to see a bullish trend, then one of the signs we want is that our highs don't get lower, but they are getting lower. And you know, it's one of those things where if you're a bull, you might not want to pay attention to this. You might want to think that, oh, this doesn't matter, this isn't really a big deal that we set a lower high, because it's not very low compared to the previous high. I mean, it's only $200 or something lower, so it's not that bad, and it's very recent, so that novelty kind of makes it seem like it's not a lower high. But the fact is, we've already moved a few percentage points below this high. What have we done? We're down by 2.5%. So that's, you know, that's going to meet a lot of breakout rules. And at the very same time, what was my train of thought? I'm reading the comments. It's so distracting. At the very same time, where we've already started to drop lower, we have now conclusively set that high. So the novelty, which might make you have a little bit of denial about this high, which might make you think, actually, this isn't very bearish, that novelty wears off over time. And one of the traps you don't want to fall into as a trader is you close your eyes to reality just because it feels novel, because eventually it's going to be real. And that realness sets in over time. It's how I give you a very, very good example looking at Bitcoin back in 2018. Switch on to the daily chart and go to the Gemini chart. A very, very good example is that there was a lot of hope still in the market while we were dropping lower, while we dropped to the 6K range. And then over time, throughout this pattern, people just gradually lost hope. And what you don't want to be is the people who lose hope over here. You want to be the person who loses hope over here, because you've now limited your losses, right? From the high to this peak. If you just lost hope at this peak, you would only lose 12%, assuming you bought at 20K. But if you lost hope, I don't know, say at 6,600, now you've lost 66%. So I think it's important to pay attention to data points like this, especially when we are in this kind of bearish trend. I'm seeing a couple comments about the CME gap, and yeah, I mean, it can still be filled. What we have is a situation, like I said, where I think the support is looking relatively weak. And if the support is looking weak, then what's going to happen if we break this level? Well, then we're down to 10K. And 10K is strong. 10K is a strong support level. We might not break that. But if we do break it, then yeah, the next stop is going to be the CME gap. We didn't quite reach it the first time around, which I always said was an indication that we might come back down again. And it very well could be the case that we end up filling this gap. The problem I have with this gap right now is the gap is roughly the size of this rectangle, right? And actually, if we dump down kind of over the next couple of days going on to the 4th of October, which, by the way, 4th of October is when David Attenborough's movie drops. So he's made a movie about the planet. That's going to be interesting. It's on Netflix on that day. If Bitcoin does end up falling down to this diagonal line on that day, then you can see that we would only be shaving the top of the box. We wouldn't actually fully fill the box. And that's a problem, because that means we haven't fully filled the gap. So it's kind of a catch-22. In order to be bullish in the eyes of people who want us to, I'm going to remove that comment. You know who you are, because I don't want you to reveal your identity. That's going to be very dangerous for you. It's kind of a catch-22, because if you're one of the people who believes that the gap needs to be filled to be bullish, then we also need to drop below our support level to be bullish. So we need to do something bearish to be bullish, and that's, you know, that's problematic in and of itself, because dropping a support level is going to weaken sentiment. It's going to make people feel nervous, and it always does, because people get bearish the lower the price drops, right? For example, and so another thing we have to consider is, I mean, what is this price action going to look like if we end up falling down to 9,500, for example, to fill this gap? I mean, it's going to look something a little bit like this, and I'm even going to paint it orange for you for realism. If you get a candle that looks something a bit like this, in fact, there's a tool for this. Let me see if I can find that tool real quick. I believe it is this over here. There's like a ghost candle thing you can draw. I have no idea where it is, though. Maybe I'm not going to be up. Here it is. It's going to look something a little bit like this, just as a very, very rough example. And I mean, you can take a look at that and let me know. Oh god, I can't end this. I mean, you can take a look at this and let me know, do you think that this section over here would look scary? And I think it very well could. So if people get scared, then all of a sudden support levels are a little bit less important, and I think that could be a problem. So so that's one of the things I want to talk about with the CME gap. Let's see what the Ichimoku clouds are showing us. Let's switch it, and I am going to get to the other analysis. I'm going to be doing all your questions as well. I see a question about the dollar index, which has come up a couple of times. With a 1 hour chart, let's switch it over to Gemini because it's a lot cleaner. With the 1 hour chart, what we have is yeah, a decent area of support. Oh, this is nice. Oh, I like the orange line. I'm gonna keep it orange from now on. What we have is a situation. This is so cool, where we do have a bit of support, but I don't know how much relevance I would assign to this Ichimoku cloud, because the market isn't really trending. If we zoom out, the market has just been sideways, and this means that an indicator like the Ichimoku cloud is going to be very dangerous to use. It has been useful. Take a look at this. We had a nice support hit over here. We nearly hit support here. That's 1, 2, nearly 3, 4, 5 successful support hits. So it has been useful, not so much as resistance, but it has been useful as support, which is good because it's support right now. But I don't think I'd be paying too much attention to this. So if we switch it over to the 4 hour, what we can see here, which I think is a little bit more important, is we've managed to break resistance. We already broke above it, and now we've broken above it again, and we have small support over here. I think another thing that this is showing us is there isn't really a well-developed shape on the Ichimoku cloud at the moment. There isn't a shape which is very well-developed on this cloud, and I think that's a problem because it's basically showing us that the market isn't trending, and that's just a representation of, you know, people are generally scared and anxious in the market. That's why, you know, no one's really hopping on big trades at the moment. If we switch it over to the daily chart, we do still have support, and we are doing okay in the support level. I mean, we're not terrible, but we're definitely not making good use of it. We did end up getting a nice bounce out of this support, well, nearly out of this support, around the beginning of this month, and since then we've seen another hit on this support level, very close to the red line, which we know is an important line on the Ichimoku cloud. But we're still not able to rise above it. And I have to ask, why? Why is this cloud not giving us much pull? Right? Because the last time we interacted with this cloud, we were talking about it on this channel, was over here. And we did really good things with the cloud back here. We didn't really even trade in the cloud. We were just bouncing around on this green line. And then we ended up just rocket ship blasting upwards, which was amazing. But we're not doing that this time around. So why, when we have the same stimulus, essentially, are we responding with such weakness? That's a problem. That's a really big problem. So it does make me think that this market could be, you know, looking weaker on the longer terms as well. And we can see even more evidence of that because this cloud is about to close up and become resistance. So, I mean, it could happen at any point. It started to expand, but that doesn't mean it's going to keep expanding. This could become a problem. And actually, when we zoom out even further, we take a look at the weekly chart. we're in weekly resistance, and this is something I have spoken to you guys about a little bit. The good news is actually that this is following a very similar pattern to what Bitcoin did in the past, where it broke out in, I think it was 2016. So we could be following a similar bullish pattern at the moment, and I actually spoke about that in the last video, so you can go ahead and check that out when you have a moment. But this isn't a good sign either. So let's move on a little bit more. We've covered the different time frames. VPVR is going to be interesting to look at. This is always a good visualization of where we might be finding support and resistance. So let's switch it onto the daily and take a look at what the VPVR is saying. Let's really zoom out quite a bit. We're going to be looking at the chart since kind of 2019, mid-2019. And what we have here is a good section of support that stretches down from about 10.4 to about 10.1. Small area of support here. This does line up with our symmetrical triangle. Take a look at this. If I zoom out, we can see that we have support right where we're going to be hitting this symmetrical triangle if we end up, this is so hard to show you, if we end up dropping down. I mean, this is beautiful how it spikes in exactly the same place. I mean, this stuff doesn't happen by accident. You know, these numbers are real. Technical analysis does work. And so, we do have a decent amount of support here, but we have an even bigger amount of support in the 9K range. And this is what excites me. It's that even if things get bad, and like I said, if we end up falling down to this 9.5K level, I do think that some panic will start to set in. The thumbnail of this video is mass panic. I do think that some panic will start to set in, but we have such good support over here that it could actually turn out to be that people get very excited, and even though panic does set in, maybe panic only lasts for a couple of days or something, and then we end up trading higher. It could be a little bit like this. There was obviously some panic in the market when this drop happened, but you can see that it really quickly got bought back up. I mean, we tried to push the price lower. Take a look at this. There were wicks where, bears really did try to push the price lower, but they couldn't. It just got bought back up really, really quickly. So there was definitely bullish sentiment in this range. There were definitely people defending this range. So I can't be hugely worried if we do drop into that level. I think that it could be panic, and it could be bad, and panic is always a bad thing for Bitcoin, right? I mean, panic makes you just completely blow through support levels and resistance levels. A very good example was this dump over here. We had some really good support levels. Let me show them to you. We had really good support levels all the way down, and we didn't end up using them. Bam, another one here, another one here, another one here. Just a couple of support levels. I'm just very, very quickly, that one doesn't count, that I'm very, very quickly showing you, and we can see, I mean, this was a relentless sell-off. Bitcoin didn't care at all. It just fell straight through. And yeah, I mean, the sell-off did slow down slightly. If we zoom in, we can see that there was a little bit of consolidation at these levels. I mean, we came back up to test resistance, sure, we kind of bounced up from this line, sure, but it was all short-lived. We didn't even do anything with this support level, which was one of the bigger support levels actually. And this is an example of where, when panic sets in, when real panic sets in, even the strongest areas of support can't really hold Bitcoin back. This was a good area of support. I very distinctly remember going long on this dip over here. This was one of the trades that's hard to forget because it was so textbook. It was so perfect the way it played out. I mean, I couldn't have asked for anything better. And obviously VIP saw that happening live. And from there, yeah, we ended up kind of rallying pretty nicely and rising higher. But when panic set in, nothing. What did we rise by? I mean, from low to high, we ended up going up by 7%, and after that we dropped by what, 50% in a day. So, when panic sets in this market, it's pretty intense. It's a little bit more intense than any other market where you might start to see panic setting in, and I think that is a problem. So yeah, as we go on, if you want to drop your questions, you can do that, and we'll kind of go through them. There's a couple of things I want to touch on as well, not strictly analysis related, but trading related. I've been talking to a bunch of people recently, specifically in the VIP group, and you've got some people who are very much at the beginning of their trading journey, and they're telling me things like, hey, I'm really stressed, I can't sleep when I'm in a trade, and this is even people who especially people who aren't in the group, saying things like, I'm kind of losing sleep over trades, and I need to wake up in the middle of the night to check my positions and stuff like that. And this is something that's very important to acknowledge, that I want to very openly say on a live stream, that this shouldn't ever be happening. It shouldn't ever be the case that you're in a trade and you're sweating and you're really worried about what might happen with that position, because it is an indication that a lot of things are going wrong. This is like you're running, and you're running for only 10 minutes, but every time you run you have really bad ankle problems and your back hurts, and you're wheezing, you're completely breathless. I mean, that's a sign that a lot of things are going wrong in your body. It's a sign that your ankles aren't developed properly, and you might have a spinal injury, and you're really fat, so you can't do cardio. It's a sign that a lot of things are going wrong, and it's the same thing in trading. So I think what a situation like that requires is pretty much a complete rewiring of how you approach the game of trading, because it's just, you're starting off completely on the wrong footing, and it's very, very dangerous. I think that for example, there are people who I know who've gone long on Bitcoin near this resistance level right here. I know a couple people who ended up going long over here, a VIP member even, who wanted to be a little bit more risky and jump into this trade, and he was telling me, yeah, I wasn't feeling too good about it originally. I mean, it looked like Bitcoin was really popping off, and so he thought that it would end, and any YouTuber that he was watching even did it as well. So that maybe added a little bit of confidence after he was in the position, but he did think that it was going to pop off, and it was close to really, really rallying high. And I did see that sentiment as well, but you guys would remember that I didn't say anything about it. I didn't even make a video. That's how insignificant I thought it was. And the reason that, for example, going long at this level was such a big problem is that your resistance level is just a couple $100 higher. And these are basic things where you either know them or you don't know them. You either know that it's usually not a good idea to go long directly in front of resistance levels, or to go short in front of support levels. You either know that or you don't. And in this case, the person didn't know it. He only realized it after the fact. But that was a case of not fully arming yourself with the information that you need when you're a trader, and then kind of jumping in, and a combination of that, alongside not even understanding what buttons to press on an exchange and different things like that, they can really, really stress you out with trading, and make you sacrifice family time and stuff like that, just to chase the dollar, and that's not okay. That's absolutely a very, very big problem, and it's something I wanted to very directly acknowledge. So I'll get back to that in just a little bit. Let me go through some of your questions. Let's see what we've got. Everyone wants Bitcoin to dump, apparently. It very well could. I mean, in line with that, I don't like to... I'm not going to say Adam, and I'm not even throwing shit at the guy. I mean, I have losing trades too. That's not a problem. But it's when they're so easy to prevent, like knowing, for example, that it's not smart to go long into resistance levels. That's where it's a problem, because if it's, and I say this as well, when I have a failed trade which was really obvious in hindsight, it's not good enough that it was only obvious in hindsight, because I still lost money. And one of the problems that I think exists with trading, and I like to stress this all the time because it's so important, is if you make mistakes as a swimmer, you'll just have a slower lap. Or if you make mistakes as, I don't know, anything, most professions that don't involve driving or being a surgeon or something, it's not a big deal. It's okay to make mistakes. But as a trader, if you make mistakes, you lose money. And that's fine if you're just losing like $20 from a mistake, right? If you just have a small trade, and your total trade size, for example, is $50, $100, that's not going to break your world to lose that money. But if you're trading with $50,000, or if you're trading with $5,000, and you make a stupid mistake which results in a 10% loss, you've lost $5,000. You've lost $5,000. That's more than a monthly wage. You've lost $500, right? I mean, that's enough to repair a car, that has serious problems. So I think there's a lot of, it's very, very dangerous to be losing money. And so you want to do as much as you can to prevent that from happening in the first place. It's very meta trading talk at the moment. And we've got a beautiful example of this happening right here. This is a member who actually, he joined VIP, I can't remember, a little bit before July, and he ended up taking up our yearly plan, and he jumped, because he got the yearly plan, he ended up having access to our advanced FORFLIES Academy. That's over 10 hours of very, very in-depth content. And I run you through it from the beginning. I basically assume that you know nothing other than how to click on a computer. You know what I mean? That's how simple it starts off, but it gets very advanced very quickly, and hopefully with a very, very good platform to teach what I'm doing. And this member over here mentioning that he no longer feels fearful for the future. He was originally very fearful about his trading career, but I made a trader out of him, which I think is a very generous compliment. And this is an example of giving a man a fishing pole instead of a fish. And here's the picture of his profit, you know, which doesn't have a quality loss. And the thing I want to mention on that actually is the VIP program, especially the yearly plan, where you have access to our advanced academy. This is not even giving you a fishing pole. This is teaching you how to build your own fishing pole. I was on a call with a VIP member just before this stream, and I was telling him, because he's also going through the course. I was telling him that my objective here is to give you the foundations, not even the foundations, but the chemical formula to the foundation, so that you can build your own foundation. And the idea of teaching it from such a ground level perspective like that, not giving you signals. I don't do that. I do show you how I'm trading, but they are not signals. You're not even allowed to copy what I do. We say it in our disclaimer. But what my objective here is to give you what you need to approach any challenge in the future in a very, very healthy way. It's no surprise over here. This guy was only a couple of months into his membership. He wasn't making big profits at the beginning. He's the guy who's making 20K a trade, by the way. Starting off small, $2,000 profit, 44% profit on Ethereum. Very, very nice trade over here. And the reason I'm showing this to you is it's a very nice contrast. And this is him recently. This was yesterday, I think, saying that he can't stop. He made 34% on Ethereum and 23% on Bitcoin, a total profit of $10,000 in a day, making it look very, very easy. And I want to contrast it with this guy because I love it. I love what this shows. This guy is relatively new to the game of trading, and or he's not new to it, but he's new to VIP. He wasn't hugely experienced, and he's going through it, and he feels like he was originally sweating the cost. Obviously, it's not cheap, but he ended up really feeling like his money was very well spent, and that the money he lost he'll be able to make back quickly because now he's coming at it from a very healthy foundation. This is amazing. This person, in my view, is in the same shoes as this guy, the guy who's making $10,000 profit in a day, up from $2,000 in a day. He's in the same shoes. It's just different time frames. And this is something that I really want to see you guys in as well. So if it is something that interests you, it's not just the course. Even if you can't get into the yearly plan, for example, that's no problem. You're getting a lot of value as a VIP member. You get to see exactly what I'm trading and how I trade it and how I navigate these very same problems of making sure that, for example, I don't go long near resistance levels because it's not smart. You have people who know this already running the VIP group, and we tell you this. We tell you this is the reason we're not entering a certain trade, for example, and that's just one example. You get to see exactly what I'm trading and when as well. So, for example, this Ethereum trade, VIP members had all of the details on this trade before I entered it, and in fact, you guys publicly knew about it too. I kept it very, very public. Beautiful profits that I closed on Cardano as well. So if you want access to everything that's going on, there's a lot of content in there. Just find out what's on offer. Like I said, my assistant is here. He'll respond to you straight away. Follow these steps. Click on the first link in the description down below, then click on the @FORFLIES and then send message to ask me how to join VIP, and we'll get you all of the details on it. Especially with the yearly plan. I think it's just an amazing amount of value to be getting, especially right now in this market where you do have quite a few people who might need some brushing up on skills, for example. So huge stuff there. But moving forward, I want to talk about the dollar index. We're getting a lot of talk about the dollar index. It's moved well, actually. One of the things that I outlined for you a while back, not a long time ago, was that it had some resistance over here, and as you can see, we did end up breaking that resistance. I was actually considering going long. I don't know how you would go long on the dollar index, but I can. I'm using Prime XBT. So This is one of the platforms that I trade on specifically for CFDs and Forex, for example, and yeah, just kind of going long, and we can see, for example, whereas Euro to USD. The only bad thing I can find about this exchange is that they don't have a search function, which is really annoying. But here we are. We can see a nice little rally on the euro against the dollar. And this Prime XBT is a very, very good exchange to be using for these kind of CFDs and the like. And the good thing for me is that, well, I mean, in my opinion, is that they let you trade it with Bitcoin. And so you don't need like a brokerage account from a mainstream broker, which are always really annoying to deal with. I find that very disrespectful to customers. These guys don't have that problem. They have very helpful support, for example. And on top of that, there's no KYC required. So if you do want to jump in on this action, then there's a link in the description. You can even find my tutorial on Prime XBT by searching this into YouTube. And you'll see that tutorial, so you can just write that down and get to that after the stream. But the dollar index has broken resistance over here. We ended up rising from low to high, up by 2%, which for the dollar index is a big deal. That's a really, really big deal. And it's now starting to slip again. Here's the thing. It did end up breaking out, which to me is very important. I take breakouts very, very seriously on markets like this because they're not hugely likely, in my view, to be fake outs. We did have a sustained period of resistance here, and we ended up shooting higher. So this to me is a very, very real breakout. And actually, I don't know if there's fear setting in your mind when you look at this chart, if you feel fearful of what's going on at all. But to me, maybe it's just the way I'm trained because I've been doing this for quite a while now, it feels. This actually looks really exciting. This looks like a very, very good development on the dollar index, just going off technical analysis, because if it ends up dropping lower, we are going to be looking at a support retest. And I think that's huge if we can. I mean, this has been a strong area of resistance. Bam, one. Let's count these individually. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9-ish. Yeah, roughly 9 hits on this resistance level, and if that's if it's such strong resistance and we're already coming down, then could it be strong support? I think so. I think that it could be. I think that it could definitely be a support area. So I think that's huge. That's going to be a really nice opportunity in this market to potentially go long over here. I mean, you know, depending on which currency pair you're trading, there would be an opportunity there, and to kind of, you know, ride that higher, I think would be a very, very good opportunity for the dollar index. So there's my analysis on the dollar index. A while back, I had this Fibonacci. Let's see how this Fibonacci is treating the market. Actually, this Fibonacci needs to be redrawn. When did I draw this? I drew this a long time ago. I don't even remember drawing it. And bam, right there, we nearly bounced off the 0.5 Fibonacci level. So kind of, yeah, I mean, that's close enough to be a support hit in my books. We are potentially getting rejected at the 382 line, but if we end up falling down to this support level and then bouncing back up for another rejection, that's still a 2% move roughly. And maybe 1.5%, and that's huge. That's huge in this market, because in markets like this, you can use very high leverage. So this is definitely something, in my opinion, to take seriously. I'm seeing a more stimulus announced, or more downside for the DXY. That's a good point. So if we've got more, this is the for those of you who somehow don't know, with the coronavirus pandemic, the US government is one of many, which is just literally throwing money at businesses and people, which isn't necessarily a bad thing, but they're throwing money at the people and businesses, and that would lead to inflation and currencies losing value and stuff like that. So if we've got a situation like that, I think that's a good reason to expect this index to drop down to the support level, and all it would take is a flip in sentiment, something bullish, like Trump winning the election is generally considered to be a bullish thing, for example. Just a rough example. It doesn't mean it needs to happen, but it's generally things like that would be considered bullish for, you know, the US economy, for example, or it could be anything else, but some sort of reason will surface similar to what happened over here, where it was gaining value. We could get a new turn which is bullish in news terms, when we drop down to this level. And it's always that way. It always happens that way, where there's very good news reasons for the price rising up and very good news reasons for the price dropping lower. And that's just the nature of trading. The nature of any market is everyone is looking at the same data as you. We're all looking at the same chart. And we've got some people who think that this is worth going short and some people who think this is worth going long. And so you have a market which is tradable. And that's just the nature of trading. It's at each price point, with only a few exceptions, people generally have completely opposing opinions over the same thing. This shouldn't come as a surprise. And we've got a good example of where that's not the case is right here. Right here, there wasn't really much consensus. There wasn't really much equal opposition in the market because we just dropped straight down like a stone. And this is an example where there wasn't an equilibrium. It was only people who were scared and bearish with this chart. So they were shorting, they were selling, they were getting rid of their holdings. And I think this is why we had such a steep drop. So this is where we don't have an equilibrium, but at pretty much any other point, especially when, for example, the market is trading sideways, you've got equal views in equal opposition. So I'm seeing your messages about becoming a VIP member. If my assistant should get back to you very, very soon. I'm not going to say your name, obviously, for security reasons, privacy reasons even. But if you do want to jump into VIP, you want to find out what's on offer, then the way you can reach out is by following this. So another thing I want to touch on. This is something that I'm going to take a lot of pleasure in talking about. I should preface this by saying I don't mean to hurt your feelings with this stuff. I mean, I don't necessarily care if I hurt anyone's feelings, but it's never really my intention. I don't mean to hurt anybody's feelings when I make these videos, but this is a time where it was so obvious before it happened, and it was really, really obvious while it was happening, and even now that this was going to happen. What am I talking about? I'm talking about what's going on with Link, Uni, DeFi. I think DeFi is a very, very good example. And you know what? I'm so proud to say this. I was telling my analyst, look, he's sometimes the guy he's mainly the guy who helps me write notes for my videos, for example, and he brings interesting topics to the table. Like last video, that was his idea, And I was talking to him. I was like, hey, I want to make more videos on what's hyped up right now, because obviously a lot of people are gonna lose a lot of money, and I can bring a lot of value to the table there, and that's gonna be good for you guys, be good for me, and a couple times he gave me information about DeFi, about Uni, about Link. No, not about Link, I don't think. And these are the hype coins. These were the coins that were really, really hyped up. And if we take a look at DeFi, we're looking at the trading view chart. If we look at DeFi on CoinMarketCap, where is it? It's not even on CoinMarketCap. I have no idea. Okay, let's use Uniswap, for example. Or even, do you know what? Link is a very, very good example. Let's use Link. What we had was a very, very big run-up. Let's kind of zoom into this. A very, very big run-up where people were very, very hyped up. But it was the same thing we see all the time. Why is everyone saying, look at Bitcoin.d? What is that? What is Bitcoin.d? I don't even know what that is. Can you even do dots on this? Oh, grayscale Bitcoin. Oh, market cap dominance. Okay. I mean, I don't know what you want me to say about this. This might even be like a data error. I'm not going to talk about this. This is another thing to keep in mind is I don't like to do analysis when things are very actively moving, because my analysis will be wrong, and that's a problem. So I like to let things settle down and then talk. But we go back to Link, for example, and there's a lot of hype behind this at the time, and one of the problems with this hype, I swear I even said this. I said this on video weeks ago. I hope somebody listened. Somebody saved themselves from losing money. What you have here is a situation where no one A, cares, or B, understands what the coin does. I still don't know. I don't care. I never bothered to research it because I saw the psychological elements. I saw the psychological elements that told me this is bullshit. So I just stayed away. I wasn't even interested. But nobody cares or understands what these coins do, and they're only buying them because the next person is buying them. So it's sexy, it's interesting, it's exciting, and people think that they're going to make money from it. That's the same thing that you and I do with Bitcoin, right? We're only really here to make money, let's be honest. I'm honest with you, come on. We all know we're basically just here to make money on Bitcoin. It's very, very clear. But the difference is that Bitcoin has very real use cases. It's recognized by a lot of people. It's got that established level of trust and different things like that. So I think it's a very, very good it's got a very, very good chance of doing well in the future. But something like DeFi, where or Link or Uni, where really its only reasons that it was rising was because of hype. Well, now you've got a situation where a bunch of people hold an overinflated coin, a coin which is too high, a coin which shouldn't be this high. They hold an overinflated coin where there is no reason for buying it, or the reason isn't as good as they thought. It looked a lot better before. And then people start selling. Right? And so what you've got here are uneducated traders. Now, it doesn't mean that they can't speak English properly or they don't know manners, but by uneducated, I mean people who, and that's not to say people who can't speak English are uneducated. I have to say this shit. It's 2020. Everyone gets offended these days. But it doesn't, what uneducated in this context means is that they don't know what the coin is. They don't know why they're buying it. And they have a lot of it, right? Because they bought it with hype. They bought it with, dreams of making a lot of money in the future and stuff like that. And now it's dropping. So panic starts to set in. And you guys will remember this. I swear I said this so recently, that panic will start to set in. And when panic starts setting in a market like this, people dump their bags really quick. People dump their bags really, really quickly in markets like this because they don't even care about the coin. The only reason they're here is because they think it's going to make them money. And as soon as that reason is gone, bam, you're dropping. You're dropping really hard. And this is a big drop, right? From all-time high, I believe this was an all-time high, to where we are right now, we're down by 52%. How long did this take? How long did this drop take? This is beautiful. I mean, it's so obvious. It's so predictable. 44 days to drop by half. Imagine losing half of your money, your house loses half of its value in 44 days. It is insane. And it's purely because the people who bought into this project only bought into it because they wanted to make money with it. So they are subject to panic. We're seeing the same thing happening with Uni, albeit a little bit slower, but you can already see it peaked very, very high on Binance. It initially started trading very, very high, and then we traded very high because of the hype from this. And then we start to see actually no one really cares. No one really even knows what this does. Many, many people who buy into this don't know, don't care. They're only there to make money, and so it's slowly bleeding out. What's another example of another coin which is slowly bleeding out? Cardano is a very good example. In fact, let's look at ADA on Bittrex. Because there's a little bit more price history, or not much more price history. What we have here was that very same initial run-up where everyone's really, really hyped up. It's rising very high. I mean, what was this? This was, 9,000 Satoshis on the 1st of January 2018. This is right when the altcoin market bubble was popping, right? And then you're dropping really, really low. There's the panic. This is like the Bitcoin drop down to 6K. And we have our hope rally, which obviously is very, very short-lived. And now people over time are just gradually, slowly but surely losing faith in the project because they never cared about the project in the first place. So what you have on your hands after this is just a very, very slow, depressing, continued sell-off where nothing is happening to the market. I mean, that's exactly why I wanted to go short on Cardano. It's exactly how I was able to book a 20% profit, move my stop loss to break even, then closed a 35% profit as well, all in a days of work in VIP, although it actually took a couple of days, which is completely fine. Very, very nice gains. It still beats out the market by a lot. Like I'm showing you over, I mean, this VIP member is very exciting in contrast with this member here because they're in the same position. It's really, really cool. I'm seeing, it's like I'm in a time machine right now. This person went from being fearful as a trader, really not knowing what was going on, very much on the edge for a long time, on the fence, now to making a lot of money, making a trader out of himself, and having his own fishing pole, knowing how to build his own fishing pole, going from $2,000 days to $1,000 days. I'm getting hyped up. This is very, very cool. And we've got people who are on varying different parts of that very same journey. Over here, this person initially very anxious, obviously, but now that he is in, really understanding what's going on in the game, learning from his mistakes a lot faster, and it's going very, very well for him. So if you want to kind of follow those very same footsteps, see in real time how I'm making profits like this, how I'm handling losses, look at how I trade, what my characteristics of as a trader are, not just myself, but the team we have, then you can get in by following these steps right here. But we go back to Cardano and we have a very, very simple case of, people just not really understanding it, not really caring. And so, yes, we did end up getting a bit of a spike over here, but what does the spike even mean? How many spikes have we had that are like this? I mean, there's quite a few. I don't need to draw these out for you. They're so obvious. I mean, they happen so many times. There's small ones, you get big ones. Doesn't really matter. They are all the same. I mean, look at this. It's exactly the same. It very well could be the exception. I got a comment over here. Cardano was $3 at one point, and now it can't even hold 10 cents. Mate, it's like 8 cents right now. It's stupid. I mean, it's $3 down to 10 cents. Can we just take a second to appreciate how big of a loss that is? It's crazy. Being an investor in this game, I think, is, sure, your upside is very, very high. It's much higher than other games. But the downside is so damn risky because there's no regulation in this space. Recently, there was like a little scandal of the Ethereum community pumping little shit coins and telling their followers what to buy because then they could dump on their followers. That means other YouTubers and Twitter people or whatever, they were trading in shit coins like Cardano, like Link, like Uni, and the only reason they were promoting those coins is to get other people to buy them after they already bought them so that they can sell to their followers. And their followers were obviously stupid enough to do it, and it doesn't mean they'll stay stupid forever. Maybe they find the FORFLIES channel and they turn into geniuses, but they lose money because of it. And this is why I really take a very strong stance against investing in this game. I don't think that investing is the way to go in this game because you move control completely out of your hands. As a trader, that control moves back into your hands. As a leverage trader, if you know what you're doing, you know the skills, you've studied the markets, you respect the game, you have patience, there's a lot of elements that go into it. But if you have it and you can see how I employ those traits in my trading in real time as a VIP member, if you have those things at your hands, all of a sudden making money as a trader is a much easier task, so to speak. I don't like using the word easy, but it's definitely not as hard. It's a lot harder to lose money too. When you've got, very well could be the exception. It could be the start of a very big rally for Cardano. But what about all of these in the past? I mean, couldn't you say that about these? Because I promise you people were. I promise you that people were saying these things back in the past. And just statistically speaking, if you care anything at all about statistics, then you will know that that this is not a healthy bet to make because it's the same thing we've seen over and over and over. Nothing's hugely different. So, Mr. Foucault, you speak the truth. I unsubscribed every crypto channel except two. Thank you very much. I mean, I'm not even asking you guys to unsubscribe from channels. That's not even you don't need to. I mean, if you want to, then that's fine. But it's about knowing where you're getting more objective analysis, where it's not about a big one to avoid is obviously people who just want to dump coins on you. I mean that's very easy to avoid. Just don't buy anything that you don't understand. I think that's a very basic rule, but I'm very surprised that so many people don't think about this. They don't understand what they're doing, and they still jump onto exchanges and they still trade and they still push buttons that they don't know what those buttons do. They still buy coins that they don't understand. And again, making mistakes like that is usually fine. In life, it's fine. It's okay. You get to learn from your mistakes. You stand to really grow as an individual when you make mistakes. But as a trader, if you make mistakes, you lose money. You lose money as a trader. And one of the worst positions to be in as a trader is when you're on your back foot, you've lost a little bit of money, and now you're thinking, shit, how do I recover those losses? Because now you start gambling, you start overanalyzing, you start stressing, you start overtrading, and all of a sudden you're very, very stressed out by the game, and it's just, one loss gets compounded by another, and you think that this will be your lucky break, but you've now lost 40%, and your wife is leaving you for the guy who wasn't as stupid, and your children are gone, and the whole world's falling over and falling down, and it's just terrible, and it all happens because you don't have good risk management. It's the root cause of all divorces, I promise you. So it's something to keep in mind over there. Anything else that I want to cover here? I think we are starting to reach the end of this live stream, but I want to take more of your questions. So if you have more questions, please do drop them in this chat. He's dead right, speculators market. Thank you very much. The peak of Link is due to these only speculative reasons you mentioned, similar to the 20k peak of Bitcoin in 2017. It's a very good point. The reason Bitcoin peaked and dropped so badly over here is because we had so many people that didn't understand what was going on. They only bought it because they were hyped up, and that's fine. That's fine because there's actual backing to this market as well. It's like if you buy, I don't know, the S&P 500 just out of hype because it's rallying so well. That's not that bad. I mean, in terms of all the stupid decisions you can make as a trader, FOMOing into an index isn't terrible. And it's not terrible because it's proven, it's been around for a really long time. There's good reasons to buy it. You can't say the same thing for all of these other shit coins, though, and that's where the problem comes in. Bitcoin has eventually made such a good recovery, right, from its bubble. I mean, 50% of its how much of its losses have been recovered? Let's actually calculate that from low to high. From low to where we are right now, we've recovered. Well, this isn't a very good number. We are only down by 50%, and we were down by like 85% over here. So we've recovered a big amount of these losses, and I think this is happening because there is real backing towards this market. I don't necessarily agree with it, but it's there. It's there, and that's why it stuck around for so long. That's why there's big money in the game right now. It wasn't sustainable over here because that balance started to go away. You had more people here who didn't know anything. They only bought it because they wanted to make money, which is fine, but eventually that has to crumble. And when it crumbles, you have a lot of people who are subject to panic in a very, very volatile market, so it's going to drop like a stone. Shouldn't take anyone by surprise. So got a lot of questions, people asking me, can I analyze Link, Uni, DeFi? They're all the same. They're just different names. Another thing, Dentacoin. Dentacoin's a very, very good example because this one ran its course. You've seen its entire life. I can't even show you the bloody chart. It doesn't have any price history anymore. I don't think this is a very good chart, so let's go into Binance. Yeah, Tether US is all right to prove a point. It just doesn't have much price history. But I mean, this was a coin that you can see Binance listed it because it was really hyped up. And Binance is one of those exchanges that that will just list anything that moves, and especially because they. Daniel's comment, Binance will list anything that's hyped up because it's very good to earn trading fees, which, I mean, sure, it's their business model, but it's very much like a casino in that sense. And what we had over here was it was very, very hyped up. It ended up getting listed on Binance. I want to see if I can show you more price history. It doesn't seem like any exchanges have price history on this coin anymore. KuCoin has a little bit more. Yeah, KuCoin is good. Here's a good example. I mean, KuCoin shows you everything you need to see. Maybe this is all of the history of the coin as well. Ended up rallying really, really high. It had the exact same bubble pop situation that Bitcoin had, but eventually there was no backing in it. And I mean, I could overlay this with the DeFi chart, for example, if I could find one, although DeFi is a bit too new. Or Link. Let me show you Link. I'm going to put this side by side. I'm going to blow your mind right now. If for some reason you thought that these coins were interesting, I'm just going to put it all to rest. And please, for my mental health, pass this message on because I don't like repeating it. It's very annoying. But here we go. We're on the 1-day chart on Link against the dollar. Just a random example. It could be anything. But here we go. We've got Dentacoin. We're going to move Dentacoin onto the weekly time frame because there's a lot of price history here. It doesn't really fit on the chart. We've got Dentacoin that had a very, very similar run-up, right? And it's the same thing. This is a fucking dentist crypto. Why do you need a dentist cryptocurrency? It's so weird. It's purely because of hype. Everyone was buying anything that moved, and that's a very, very big problem. So we ended up pumping very, very high, but then we dumped lower and it never recovered because there was no backing there initially. I'm not saying that there's no backing for Link. There very, very well could be. But we know that this rally happened because of hype, because it's dropping so much. If it doesn't happen because of hype, it wouldn't drop this badly. And this is an example of something that ran its course, and now it's, I mean, can you even read how many digits that is? That's 2 Satoshis, by the way, in case you were curious, because I checked before this video, before this live stream. It's 2 Satoshis, which is, I don't even know how much it is in dollars. It's less than a fraction of a dollar. It's a very, very small amount. And it used to be, what was its peak? Its peak was 685 Satoshis, I believe. Or 68 still. Yeah, I can't even read it. Point is, it was exponentially higher. It was way higher. I mean, I literally draw this for you from high to low. It went up by 25,000%. From where it is right now to where it peaked, 25,000% higher. Pure hype train. This is so dangerous to put your money in. It very well could be a case where you get in over here and you exit over here, and good on you. You've just gambled and you made some money. But that's not a process you can repeat. That's not a process you can repeat, because what if you tried to buy in over here and you thought you would sell over here, and now you've been holding all the way down because, you know, you thought that this rally would go up to your sell point, so you would have sold over here, but it didn't, so now you're lower, and since then it hasn't even come back up to your entry point. You can't break even because you've shot yourself in the foot by buying something that wasn't worth buying in the first place. This is very much an example of gambling as a trader. It's fine. It's okay that it happens. You know, it's trading. It's war. I don't feel sorry for anyone who loses money, for example. I mean, I do, but you know, that's only when I'm in human Sammy mode. You know, when I'm a trader Sammy, I don't give a fuck. I don't care, and it's fine because that's the kind of, you know, those are the people you make money from as a trader. But you go back to just being human, and this is so sad. This is so sad, and it's so easy to prevent. That's why I take the approach of trading so seriously, because as a trader, you move that back into your own hands. You very much can control what you do. You can, you know, influence good trades by doing good analysis, but you can't really do that on something like Dentacoin, where you're just buying a hype train. You're just playing psychology at that point, and that's fine. Playing psychology is fine. It's very easy to play. But it gets very unpredictable when you enter big hype phases and big euphoria phases. And I think that's where the problems come up. I'm seeing comments saying that's why you need to buy dips. I don't know what dip you're talking about. But for example, if you are talking about the dips on Dentacoin, there were a lot of people who back then were buying the dips on Dentacoin. You know, there were a lot of people who were buying the dips on Dentacoin way back. I mean, they would have, and let's replay the chart. Let me prove this point to you crystal clear. Like I said, please spread this to your friends so I don't ever have to repeat this, because I hate talking about this. But I mean, let's take it back over here. Let's play it over slowly. Each candle that passes is a day. And what we have over here is okay, Dentacoin has dropped from over here down to here. It's dropped by 27%. Okay, that should be a buy. Let me buy in over here. Now it's at support. Okay, I'm going to buy over here. And now next support is over here. Okay, I bought over here. Now I've made some profit. Nice, I'm nearly up to break even. Nearly up to break even on this first entry as well. But if we speed this chart up, we've never gone back up to those highs, ever. We've never gone back up to those highs. You bought in over here, you bought in over here, you sold a little bit over here, you made a small profit, but you're still in a big loss. And if we play this chart forwards, you're not even coming close to making back that money. Not even coming close. Time ruins you as a trader who just buys hype. It ruins you. Look at this drop. Look at this drop. You can't, it doesn't even come close. So buying the dip, that kind of strategy, I'm not saying this is what you're talking about, by the way, it could be anything, but buying the dip, a strategy like that in a market like this is dangerous. Very, very dangerous. In a market like Bitcoin, it's completely fine. I mean, you go back to what happened in 2017, for example, and we take a look at the rally that it had over here, and you have a very good example of where buying the dip was actually a very, very good thing to do. You had Ichimoku support, you had Fibonacci support, you had moving average support, all the same things which Dentacoin would have had, by the way, but the difference is there's good fundamental backing towards this, and it stood the test of time. 10 years in the tech world is a big amount of time. 10 years was a big amount of time, and Bitcoin has stood that test. So, I mean, to me, that makes it very, very special. That makes it a very, very special coin to be trading and looking at and things like that. And that's why I choose to trade this on leverage, because it has stood that test of time. It's a good, and I get a couple questions every now and then saying, hey, but Sammy, you don't look at other altcoins, don't you miss out on opportunities? And yes, I do miss out on opportunities. I could have made money on Link or DeFi or Uni, for example, if I bought it earlier, but I didn't, and I did miss out on that money. But since then, I've been making money up and down on Bitcoin. So even though I have, potentially been missing out on profits in section A, I've been making a lot of profits in section B, C, and D. And that's my approach. That's why I never really care about missing out on gains. It's why, for example, even though there were good reasons to go long, for example, at 10.9, why I didn't. I never chase a trade. It's very, very dangerous. And there we go. So go back to the comments here. I see one comment, link does not equal Denta. That's completely fine. I mean, if you're saying that, these cryptocurrencies are not the same, I understand they're probably not the same. I haven't done the research because I don't care. But what we have is a situation where people are still buying something which isn't proven in the long term based off hype. And everything isn't proven in the long term at some point, but it's not my business to be betting on the next Tesla or the next Bitcoin or the next Uber. I just I want to make money on what's a lot more predictable, where I can find out what the answer is very, very quickly and refine my strategy very, very quickly. So there we go. That's my approach over there. That's why I think so strongly about all of this. Astronaut wants me to look at Cardano, but I actually already did look at Cardano throughout this video. I do want to give you my main analysis on Cardano though, and what we have over here with Cardano is it did end up ripping right through all of the resistance levels, just absolutely blew through these resistance levels, stopped me out of my position at break even, so I did close a profit, and the rest of it I got closed out at break even, which was very, very good risk management. It's perfect risk management actually, in my opinion. When I journal my trades, I also write things like, what I could improve on my trade in the future, and one of the things I would write in a situation like this potentially is I should have taken more profits while the price was low. But actually, that's not an improvement that I wrote for this Cardano trade, because I shouldn't have taken profits earlier. There was no reason for this pump to happen. I still can't see any technical reason for Cardano to pump from this point over here. There's no support I can find. The only reason it could pump is because it's already dropped by so much, and that's not a good enough reason, because what about this drop? Wasn't this too much? Wasn't this, well, this apparently was too much, but I don't know, wasn't this drop too much? Wasn't this drop too much? You could say that everywhere. It's not a good reason to assume that a market might go up, but it just happens sometimes. It just happens that the market does something stupid and it does something unreasonable, and what's very, very bad is if it ruins you as a trader. If it ruins you as a trader and you don't have a good stop loss and you don't have good risk management, then a move like this would liquidate you. You would lose a lot of money. But my stop loss was at break even. It worked out very, very nicely. It's something I'm very proud of. And again, it's seeing things like this. You saw this live in gold. I mean, VIP members see this all the time. This is all I do in VIP. This is probably the biggest benefit of it. And they were able to see how I do this, how I enforce these very same measures of discipline over the long term, and I never ever get weak on them. I never sacrifice them. I never skip them. I very much always do them, no matter what my feelings are saying, and I think that's very, very important because it keeps you green in the long run. But over to the analysis, moving away from the trading stuff, we did end up pumping out of this resistance area, and we are falling back into what's now support. It was resistance, now it's obviously turned into support because we've gone above it. Just refreshing the live stream. I haven't drank any water since this live stream started. Yeah, what we had was is Cardano is dropping back into this area. It was an area of, just realized we've been live for an hour. Amazing. It was an area of resistance for quite a long time. Let's actually measure this out. It was resistance for a month, which for an altcoin is a very, very long time, and so that's why we had such a steep drop when we fell below it. But because we ended up rising above it, I think it's going to be support this time, and I think that's very, very important because it could mean that Cardano is ready to rally higher. I don't think that's the case. I think it's just going to be something a little bit like this, or something a little bit like this, where it's just a short-lived rally. That could mean it goes up to 1.1 thousand satoshis, or it could mean it peaks over here, or it could mean it goes up to 1,600 satoshis. It could mean anything, but the overall idea is that it's eventually going to start trending lower slowly, and this is what I'm interested in. This is the meat, the cake of the show, because it's so predictable. I think it's very foolish to bet on Cardano rising very, very high, because each of these rallies throughout its history have been short-lived. But it's its drops, its long-term sell-offs have lasted a very, very long time and dropped by a lot. So I think it's very sensible to be betting in the short direction over here. Obviously, I've got to say, I'm not giving you financial advice. Do your own research. Don't be a bloody idiot, stuff like that. But what we have over here is a very, very good example of Cardano potentially coming back down to the support level. If it ends up rising, potentially just dropping lower. And then, yeah, I mean, it could be making use of the support level right now as well. So this is going to be what I'm interested in. Doesn't mean I'll completely avoid trading the long side. I mean, I won't say no to easy money, but as a trader, I mean, that's a good thing. It's okay to break your rules every now and then, as long as they're not crucial rules like risk management, for example. It's okay to break those rules if there's an easy trading opportunity. I think that's one of the things which is very taboo in this community. But I mean, you got to know the rules first. But once you know them, you can break them, and that's fine. Got a comment saying Cardano is fundamentally strong, though. Sure, maybe it is. But I'm just here to trade it. And so far this trend is really bad. So it could be anything. It could be Tesla stock. If the trend was this bad, I would be going short. That's basically the how do I say that? That's basically the bottom line for me. I remember a question earlier in this stream talking about risk management, as somebody asked me about position sizing, and position sizing is a good question. With position sizing, I think it's important to not trade with too much money, because the more money you trade with, the more anxious you get. It's not easy to remove emotions from your trading if you have a lot of money riding on your trades, because you just start sweating too quickly or worried about what you might lose, or maybe even worse is that you're worried about, you're so excited by what you might make, and emotions are really, really bad to be fostering as a trader. They really do cloud your judgment, and one of the things VIP members see all the time when I'm in my trades is I never get overexcited by what's going on. I might be closing 100, and believe me, I was very hyped up when I closed this 180% profit. I was very, very happy, but that hype lasted maybe 5 minutes, and obviously, I mean, let's be honest, obviously I'm hyping it up. Sorry, that's a lot of bad noise. Obviously, I'm hyping it up a little bit more in videos because it is really cool. For example, obviously, people who can't hit these profits consistently, this is mind-blowing. But for me, there's not much emotion in this. I make a big profit, I'm indifferent to it. I make a big loss. It's never really a big loss. I make a controlled loss, and I'm still indifferent to it because there's no emotions in it. And when you trade with a lot of money, you start to open up the potential for those things to be going wrong. And I think that's a really big problem. It really does screw you over as a trader. And for that reason, I always feel like trading with small balances is the way to go, especially kind of when you're starting out. And there's a lot of content on that where I talk. You buy it standalone, get it free of charge as VIP member. You get to keep it forever. It's something like that. It runs you through from A to Z, assuming you don't know anything, going all the way up to very, very advanced theories, scaling you up in a controlled, sensible way, building very, very good foundations for me, especially when I start hitting the hour mark. It's not easy to keep going because I'm basically talking for an hour straight. I mean, that's not easy for anybody. So I think I'm going to be wrapping this up relatively soon. If there's anything else you want me to touch on, do let me know. I just want to take a quick look at Ethereum. I haven't looked at Ethereum for a couple of days. We do have that resistance overhead, but we're not even able to get close to it because we're starting to struggle at this support area. If we end up dropping, $5 lower, $10 lower, and I think we're going all the way down to 320. So that's a level to watch, or resistance up here. But in any case, right now it's right in the middle of a trading range, so I'm not interested in trading this at the moment. What else do we have in the comments? If you guys have any final closing questions, then do let me know, and I will address them. If we can shoot up the likes, that would be amazing. If we can throw the likes up on this video. If you are new to this channel, then please do subscribe. And you'll be getting access to more videos like this, more live streams like this. And do you want more live streams, by the way? Is that something that interests you? If you do want more live streams, then please let me know in the comments right now. And I can. Okay, Ed's saying I need to do this more often. I'm very much happy to. I swear I just forget. I just forget to do them. So if I get a message to do it every now and then I'll definitely do it. So so there we go. If you are new, do subscribe. And if you're not already in the FORFLIES Gold channel, I know I always tell you about VIP, but If you do want to know, if you do want to gain access to the other analysis that we post, the analysis which is more time sensitive, for example, where you know, a video just isn't good enough because I only make one video a day, then you are able to see all of that stuff by clicking on the first link in the description below. It's completely free, very, very quick to get in. So there we go. Loving the support, guys. Very, very nice. Thank you for subscribing. The Bank of, you want to see the bank? I've seen that question a couple times. Let's look at the Bank of America chart. I've never looked at this before. I like to do blind analysis sometimes, mainly just for friends because I love my friends. But let's see what's going on with the Bank of America chart. Bearing in mind I've never seen this before. There's a lot of price history on this chart. I mean, it is an old bank, but it's been rallying very, very nicely over time. 06 came along. I don't remember a crash. Oh, sorry, this was 2008, 2009. Oh, wow. So Bank of America took a very, very big hit. A very, very big hit over here. What was this drop? My God, this is big. What was this drop? This was a... Okay, that's more than Bitcoin dropped by. All right, 95% on a bank. Damn. I didn't know that it got this bad. It's then recovered massively, and it's nearly starting to hit all-time... No, it's not. Sorry, we're on the logarithmic chart. Oh, damn, this is way worse. This is way worse. On the linear scale, it's nowhere near the all-time high. It did go up by 1,300% in about 14 years, in 12 years. It did go up by about 1,300%, but still nowhere near the all-time high. It's going to take another 50% rise, which is not easy for something of this size. And we are now, zoom in onto the weekly time frame. We had a nice bullish rally on this chart. We came off this swing low very, very strong. We had a V-shaped correction. It was short-lived, but then we ended up trading higher in a slower, more controlled rise, which is very, very nice. We had a controlled, slow rise on this chart, and I think that is what enabled the Bank of America to, in terms of their publicly traded price, to then rise higher a lot quicker. It did dump again. This dump over here was the same in characteristic as this dump here. It's just that we entered this dump in a healthy way, and we entered this dump in an unhealthy way. Let me clarify this so I can make this very, very clear. This dump happened, and it was very, very big because we had a quick, hyped up rise. There was euphoria, there was hope, there were emotions driven behind this rise. I can't help but feel how many terrible people, millions lost their homes and jobs. I can't help but think about how many terrible people who really screw over people who can't afford to be screwed over made money or felt hopeful on this drop. I feel very intense emotions when I talk about this chart. But back to the chart. It was an intense drop because it was an intense rise. But the next time around, our drop was a lot smaller because the rise was a lot more sensible. So it enabled the Bank of America chart to start rallying higher. And obviously there were people talking about how it's going to hit all-time highs at these levels. But now it's dropped again in the wake of the coronavirus fear, uncertainty, and doubt. So let's now take it onto the daily chart. We first started out by zooming out, and now we're zooming back in. So this is an example of how I like to tackle new charts in these markets. I will always look at the very, very long-term chart so I can put it in the context of the shorter-term charts, or the other way around. I forgot, but that's what I'm doing over here. Very, very important approach to technical analysis, in my opinion. And if you didn't know this already, then it might be worth reading a book on technical analysis called Technical Analysis of the Financial Markets, if you don't know this already, and a link to that book is in the description for you, so go ahead and check that out. But what we now have on the daily chart is there was a big crash because of the pandemic, and this chart is starting to recover again. So I don't know who asked me about the Bank of America chart, but I'm going to ask you a counter question. Do you believe in the economy rising, the economy getting stronger and healthier over the next 2 to 5 years? If yes, then this chart is probably going to rise with it. Do you believe that bankers and stuff will be getting richer? If yes, then this chart is probably going to be rising with it. But if you think that things are about to get worse, then what this is we've now entered a downtrend with a very, very big, steep sell-off, and we're in a rising wedge. So this could end up breaking down. And in fact, depending on how you draw this, the Bank of America chart has already continued its bearish trend with this drop. So there we go. That's my analysis on the Bank of America chart. We do have support. A drop might not be big. It might only drop to, for example, $17, which is a big percentage loss actually from current prices. This is 25% down, which for a big stock like this is a big deal, but it's not as bad as this drop, for example. So we could be getting something a little bit like this and then rising higher. Or I mean, maybe all the coronavirus stuff is just gonna kind of evaporate away when we get the vaccine, if you believe in the vaccine, or something like that, and everything's going to be golden in 2021, 2022. And if that's the case, then I think that this stock will rally alongside everything else. Right, it's definitely time for me to go. Definitely time for me to go. So I'm going to get going, and what am I gonna do? I don't know. I'm gonna go get something to eat. There we go. That's my analysis on Bitcoin. We're at a support level. We're starting to bounce higher. This is what happens at support. Easy stuff. Hex. What is Hex? Everyone's talking about Hex as well. I don't know. Are we talking about this? Are we talking about this? Or what's the symbol for Hex? Hex Composites? I've never heard of Hex. So you need to be a little bit more specific. It's rallying very, very nicely. Since 2001, this is in a very nice uptrend. This is very, very good. Looks maybe like a bubble, but I wouldn't touch this. This looks too scary. It's time for me to be gone. Absolutely. There we go. All right. I will see you all in the next one. That's me for today. It was a good stream. Very, very good stream. I'll do this more often. All right. You guys have a good day. Bye-bye.